Welcome and thank you for joining us in our series of finance focused videos. I'm Julian Larocque of Your Extra Hands, and we take finance very seriously. That's why, as part of Financial Information Month, we have this three-part series where we provide entrepreneurs with some important information relating to your finances and how you can improve your business. Today we have a guest with us. I'll allow him to introduce himself as we take you through this session. We hope that you'll get some actionable insights that will assist you as an entrepreneur to grow your business. Our guest, you are free to introduce yourself.
Thank you, Jillian, and welcome everyone. Thank you for viewing this, and I want to say welcome to all the supporters and followers of Extra Hands, a very innovative and very well put together business that helps your business. So I am Elijah Libla. I am the owner of EJL Accounting Services. My profession is in accounting. I have over 18 years experience in accounting services that spreads through a wide range of accountancy services. And when we speak of accountancy services, we also include bookkeeping. We also include the preparation of financial statements, budgets, forecasts, business plans, financial advice, auditing, reviewing your businesses, probably getting a check on your business as to the performance, position of your business, and a whole sorts of things, including also filing of your taxes, knowing what the financial laws, the laws of the Company Act is and how it impacts your business. So anything that does do with your business in terms of growing it, expanding your business, making your business very viable, profitable, managing your cash flow, the works, all of that can be covered through EJL Accounting Services.
That's a whole suite. You're right. It's a whole suite. when you land at EJL Accounting, you're fully covered.
That's right.
Thank you for agreeing to be here with us for a short session, part of a three-part series that we have done as part of Financial Information Month. This discussion, as we begin, this discussion will seek to simplify for the non-financial entrepreneurs, simplify the financial reports and statements, and to give us a level of appreciation as to the importance of keeping your books in order to be able to have access to those reports. So Elijah, let's discuss. Go ahead.
Okay, so if we speak about financial statements, commonly referred to as FS, we hear of two words within this: financial and statements.
Yes.
Financial deals with money. You hear the term financial and you think money. And many of you entrepreneurs, although you have a passion for what you do, but definitely you are hoping to generate monies from it. As a matter of fact, we know money is the main exchange by which we use to exchange goods and services, to maintain our livelihoods, to maintain our lifestyle and what have you. So your financial statements really is what the word suggests. It is what your money within your company represents. And that takes various forms. We have many types of financial statements. However, there are three main types of financial statements. And I will probably not go into detail until I allow Jillian to lead the questions on it. But just to give you an overhead of what financial statements are all about, it's really about telling you the position the performance, and the cash flow of your business. And there are three main financial statements that are often requested if you go to seek access to a loan or funding. If you're approaching someone, an investor, to invest in your business, they're going to ask you for your financial statements. They're going to ask you for what is known as your balance sheet, which tells the position of your business.
Yes.
This represents the list of things that you own, which we refer to as your assets, and the things that you owe, which refers to your liabilities. In your balance sheet, it also tells what is the net worth of your company, which means the total amount of things that you own, less the total number of things that you owe. Well, if you come out with a positive balance, it means that that is the net worth of your business. If we move over now to the profit and loss or the income statement, this represents your sales. This is where you generate your revenue. You might have multiple revenue streams, and by that we mean you might be providing services, you might be selling products, whatever types of things that generate your money. We can refer to them as revenue streams.
Right.
Now, within the profit and loss, we have your total revenue, but in order to make money, you must spend. And this is where you have different types of expenses, like your operating expenses, things like paying yourself, your wages and salaries, contributions that you make to Social Security. If you are renting a space, rent, utilities to power up your equipment that you're using. All of these are expenses. And that's what the profit and loss does. It puts everything within this report that shows you how much income you're generating and how much it's costing you to generate this income. Now, if you plan and grow your business and manage your business well, you should be able to generate more money than you're actually spending. And the surplus of this money is what is known as your net profit.
Yes.
At the end of it, let us assume that you had a net profit at the end of a month or a year. Then you as a business owner should decide how much of this profit am I going to keep or reinvest into the business. So it is very important to don't think of just pulling out all of your net profits from the business. It would mean that the business would not be able to grow. And so you must be wise into how you manage your net profit. And the third financial statement that I want to mention is that of what is referred to as a cash flow statement. In a cash flow statement, as the name suggests, it tells of the direction of the flow of cash. There are three main areas of your cash flow statement. There's the area that focuses on the operating activities, and by this we mean the day-to-day operations of the business. So this would include as things that we mentioned before. It would include things as the sales, the trade, the purchases that you make. This is the most important part of any business's cash flow statement, the operating statement, because this is the key thing that generates cash for you. And in that area, you should always see or always target to have a cash flow that is positive.
Okay.
Just before we move, I just want to tell you about the other two areas of the cash flow.
Sorry.
The other two areas of the cash flow is what we call investment activities. And this is where persons might invest in your business, like a shareholder, somebody, a partner that joins you, or it might be angel investment or your own personal investment that you put within there. Would tell how much that you're generating from investments. And also there is the financing activities, and that is normally where you access finance from a bank, you receive a loan, your payment of the loan. So all of these three components kind of tell you how your business is doing in terms of your cash flow. What direction is cash moving? Overall, you should have a net cash flow that is positive, meaning that you should have actual monies at the end of your period of transacting, and you should not be owing in, and that shows for a healthy business.
Okay. I just wanted to, sorry for jumping in there, but I think I just wanted you to repeat the first part of the cash flow, the cash flow section for me, please.
Sure.
Just
sure. Are you referring to the operations?
Yes.
Part of it?
Yes.
Right.
Yes. Yes.
So
I just
so
want to
as
go a
yes.
little deeper in that part, because many entrepreneurs are in that area and not necessarily into the other investment areas. And some have financing, so they need to maintain an eye on that area. But for the operations, a lot do not have angel investors or financing that they have to deal with. But for the operations, I just want you to expound a little on this part of it.
Definitely. And I think it's worth expanding and emphasizing that area, because it's very, as I said, it is a very critical area for a business growth, for its existence, for its longevity. And so when we focus on our operating activities, let us take, for example, somebody is producing coffee. Some of the expenses that the person is going to have would be things such as purchasing the raw coffee beans. And you might purchase it from different suppliers.
Right.
So this is one aspect. You would have to pay transportation.
Yes.
It's an added cost to get these coffee beans from wherever you're getting it. That you would have to pay for labeling, for packaging. You would have to pay for persons if you have to roast the beans yourself. You need to pay persons to roast and to clean the bean, to grind the bean into the fine product that you are making.
Right.
And all of these are expenses that the company must meet. And you ought to sell your product at a cost that is, or at the price that is higher than the cost. Right. In order to enjoy a profit. So there is this thing that some entrepreneurs sometimes think they are the same. Profit and cash. In the long run, cash equals profit in the long run. But in the short run, it is not exactly so. And by this, we mean, imagine that this, if we use the illustration that I mentioned of a company with a coffee bean, if that person made a sale of $1,000 to a customer, but have not yet collected this money, and on that sale, the net profit of that sale is, say, $300. Now that's a profit, but no actual cash has come back into the company.
Right.
So in the short run, profit does not equal cash. Well, in the long run, if they are able to collect the cash,
yes,
then it becomes cash. So that's very important why you need a cash flow statement to help you to see how each of the three main areas, and we're specifically speaking now of your operations activities, that you should always try to operate your business within a cash flow that is realistic, that you can reach beyond. So never go beyond or try to acquire too much resources that your cash, you're always short for cash.
Right.
So some of the quick ways that you can help to improve your cash flows in your operating activities would be to finance using credit, taking your raw materials and credit. So if you're doing transaction with someone who's selling the raw coffee beans and they have agreed that you would pay them in 30 days, then this portion of time that you are given this raw material, you could try to transform this raw material into your finished product and try to sell this product within 30 days.
Yes.
And
before.
if you do right, so if you do that, that means you're helping to improve your cash flow
Yes,
position.
yes, yes.
Okay,
So what
because
is
there's a difference in you paying upfront. If you were to pay for the coffee beans upfront, that is
yes,
cash you have to find somewhere. Whereas if you get it on credit, and you could turn that around and sell the product um, to be able to repay your supplier on time.
it gives you some leeway to have cash to
Right,
do other things, and that is essential because yes, you need the raw materials, but if you have a relationship with your supplier, it makes sense to delay the payment. I mean, especially when you're dealing with somebody on a regular basis. It's not like you're running away or you're going anywhere. So that makes perfect sense.
yes, you're right. But I would not use the word delay because one of the things you want to do as well, you do not want to damage or have your supplier lose confidence in you. Because if your supplier loses confidence in you, it means that you will not be able to get that quality product that you're depending on them to trade. So
Right,
the
right.
relationship between you and your supplier should be very important in that you have an agreement. If
Yes,
your
yes,
supplier,
yes.
right. So if your supplier agrees to give you
It would have
a
to.
credit period of time, you
Right.
try to stay
The
within
thing is,
that time.
sometimes some entrepreneurs do not think to ask for those arrangements. That's why I mention it as a delay,
Right,
because
right,
that would be understood that this is the period within which you will pay, but
correct,
it has to be understood that between both parties that is the
mhm,
arrangement. So I'm saying it makes sense to have that type of arrangement between you
right,
and your suppliers. It makes sense to
correct,
do that.
correct. So
Uh,
so that's one way of extending your cash flow. And
right.
now another quick way of doing so, it's um, now we're going to look at the other side of the coin where you now would be seen as a supplier. So that means you're selling your product on credit. Now, the reason you would sell your product on credit because you want to increase the volume of your sales. Customers are going to go to the shop that they can buy credit on credit. They
Yes.
might be hard for cash, and so they would rather buy from somebody who would give them a credit period to repay. And one of the things you can do to maximize your sales, to grow your business, and to really sell out your product is to offer your product on credit. However, this is where the cash flow statement helps you to see how you're doing within your operating cycle. And so it is very important that if you're selling on credit, that you're on top of your customers, that you ensure that you invoice them on time. So if somebody purchased something from them, that you send them the invoice on time, that you also take a look at your age receivables. That's just the term that it is called, but to simplify it, it's basically the list of customers that are owing you. You should take a look at that and look at those that are within the time for them to pay. So if you're giving them 1 month to pay, you need to look every week and see who is coming up for payment. And do not wait when it's the last day to follow up for payment, but you could be proactive by sending an email or giving them a call or sending them a message,
A
letting them know, look,
reminder. Yes.
right, a reminder, letting them know that your payment is due within a week. So that helps the process, keeping that communication between you and your customer, reminding them of their debt that they need to settle. Because the quicker you can collect the quicker the quickly the cash cycle. I know we're short for time, so I don't want to go into too much, but I think that's very necessary if we look at the cash cycle. In that, you buy the beans, we get it on credit. That helps us to free up our cash. But
Right.
when we sell the end product on credit, that kind of stifles our cash. So we must have a good handle on how we manage our receivables to collect them within time. Also, how quickly we can process that coffee bean. If we can process our coffee bean within 3 days and have
Right.
it on the shelf for sale,
Yes.
that is remarkable, because it means that if we lessen or shorten the time that we can create the product into its finished state, that means it is quicker, it can be on the shelf for purchase so that we can get our cash. So all of these small techniques are very important. I think as you grow your business, you should practice those techniques, because generating the cash can help you know to reinvest that cash into the business, to kind of keep you away from long-term debt.
Yes, 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 yes. Well, one thing with entrepreneurs, you find that because you have to be working on your business, certain things that have to take place in the business suffer.
Right.
So things like sales and chasing and keeping up with your receivables, those things sometimes suffer, especially with micro businesses when
Right.
it's one person doing everything. And that is where
Correct.
extra hands comes. That's where
That's
extra
right.
hands fits in. As someone who is trying to build your business, you must spend more time working on your business as opposed to in your business. So you would need to get help with some of the things that you need to do in there so you can focus on growing it, such as reminding customers when their deadline is coming up to pay, and much other things. And you know about the bookkeeping and how difficult it is for a lot of entrepreneurs to actually keep their books.
Right.
You know the difficulty with that.
That's a very good point that you made, because although the business is a micro, you might say to yourself, where am I going to get money to pay an accountant? Where am I getting money to pay a sales rep? Well, if we think of it in the grand scheme of things, where we outsource some of our services, it's going to help in the long run. So you could reach out to an accountant like EJL Accounting Services, and you could request certain things. You could sit down and say, okay, this is where my business is. These are the challenges that I have, and within that, you could sit and identify what are the services that can be provided at at a reasonable rate that adds value to both parties. And this is as extra hands, for example, because some persons try to wear all the hats in their business, and this stifles the growth of the business, and sometimes
Right?
it even kills the business.
Yes.
I think you need to identify where your forte is, what it
Yes.
is that is your strength, and you have to also recognize your weaknesses. You also have to recognize that you are not blessed with um, multiple hands and multiple feet, and you're not cloned. All right, but you're one individual, but there are other small businesses within the ecosystem that you could partner with, that can help you to grow that business, and together you grow. So if many small micro businesses would come to extra hands, that makes extra hands have more customers, which means that the fees that you charge can be lower,
Right. Right.
because you're starting to get economy of scale.
Yes.
And
Yes. Yes.
that is what micro businesses need to really look at. Sometimes they do not approach smaller businesses like themselves to engage in a dialogue, to engage in a negotiation where they can add value for each other, but simply
Collaboration.
just
Collaboration.
right. So you just simply cut off from their minds and say, look, I can't afford it, without even having that conversation.
Yes. And something that I think of all the time is the need for more bartering to among small businesses, but that is a
Mm-hmm.
subject for another session.
Right.
Bartering among businesses, I think that is something that doesn't happen enough. That doesn't happen enough in our system because we all try to operate on our own, you know.
Right.
So,
Right.
Elijah, there's one final thing you would say to an entrepreneur listening out there who may be struggling with dealing with their financial statements. What would you say to that person?
What I would say to that person, that you are not alone. Many businesses struggle with that area as well. Many of the businesses that are very, I would say, profitable and growing and very great businesses pass through that hurdle as well. What I would say is, do not face those challenges alone, but look out to persons who can provide support. I would like to say to them that you can't do everything. You don't have to be an accountant. You don't have to be a sales manager and all of that in one. You focus on you, on what you do well, to grow your business, and the areas that you need support with. Then you connect with companies, you network and exchange values with them to grow your business. But do not let those challenges deter you. Of course, EGL Accounting Services is more than capable to help you with your financial challenges. Feel free to reach out. I guess Jillian will share my contact information with you, and then you can reach out to us, and then we can have a talk. But I would say, continue to grow your business. Continue to focus on what makes your business the best.
Thank you, Elijah. And thank you to you all for taking the time out to look at this session that we've had. And I agree with everything Elijah said. Reach out, be ready, be set to grow. Take care.